death and taxes, two things that are guaranteed in life. But in 2024, there might be a third guarantee, and that's interest rates finally coming down. After a massive spike, we're likely to see interest rates come down, but how much and how does it affect you? Just last week, the Bank of Canada kept rates at 5%, so the overnight rate is at 5%, but investors have priced in a rate drop by 75% chance by March. So are we going to see a drop by March? I would say it's very highly likely that we will. And based on the data out there, we're most likely to see that. With inflation cooling to 3.1%, unemployment going up a little bit to 5.8%, which came out last week, we're seeing some data coming across that we've been looking for, the Bank of Canada has been looking for, to trend so they can start lowering rates again. Again, we saw a monumental spike in rates, and it's affected a lot of us, and I'll cover that here in a second. But through 2024, we're going to see the rates drop substantially. And many economists think that the rates rate might come down even more than we think. And most of us are pricing in about a 1% drop through 2024. But to create the proper monetary policy that a lot of Bank of Canada is talking about, a lot of economists are talking about up to a 2% rate drop. So no one has a crystal ball. No one knows what's going to happen, but it's almost guaranteed that we're going to see a bit of a rate drop in 2024. And for a lot of you, like myself, that have a variable rate mortgage, 2% would be nice versus just the 1% that's forecasted. So how does a rate drop affect you, both good and bad, as you head into 2024? So 3 potential benefits for lower interest rates. Number 1 would be more spending. People are willing to spend more money, take on more debt, because the debt payment is less. That means big ticket items like vehicles and houses are probably going to start being purchased more. Again, we've seen the last 6 to 8 months, car lots start to fill up again. People aren't buying new cars. And, that's affecting people. So going forward into 2024, I think we're going to see rates drop. Like if you're buying a new vehicle and not paying cash for it, you're paying a very high interest rate. That should come down in 2024, which will spur spending. Again, same with housing. It's hard to go buy a new house right now, take on a new mortgage, maybe break your current mortgage, and renew at 5, 6, 7% mortgage rates. It just doesn't make a whole lot of sense. So as rates start to drop, we'll see more inventory and more movement in the housing and car and many more different areas as well. The second benefit to lower interest rates would be a lower debts and lower interest rates on your current debt. So a lot of you have current debt, whether it's credit card, it's your mortgage, many different ways you're going to have debt nowadays in our world, but those interest rates will come down a little bit, especially if you have a variable rate mortgage, like I said, like myself. I wouldn't mind my mortgage coming down a little bit from where it is right now, and we will see that through 2024. So that's a good thing. So if you're carrying some debt and that debt payment's starting to cripple you a little bit, hopefully you have some relief coming in 2024. The third benefit of lower interest rates is that we're going to see more house inventory on the market. And I know right now, where I live in the Lower Mainland here, it's starting to pick up the last little bit. Things have started to move, but inventory is still quite low. We're going to see a lot more inventory. So as interest rates come down, especially maybe the first quarter point drop, we don't see a huge inventory spike. But probably once we see 0.5 point to 3/4 of a point drop, we're going to see a lot more inventory hit the market. People are willing to sell, move, take on a new mortgage. What happens right now, both in Canada and the US, especially the US, but even in Canada, is that people aren't willing to sell. Like, I don't want to sell my house if I'm in a fixed rate mortgage and buy a new house if I can't port my mortgage and take on a new mortgage at 2 times, maybe even up to 3 times the rate. So until rates come down, I'll hold on to my current house, my current mortgage, and wait till rates drop to be able to move that house. So we're going to see more inventory with lower interest rates going forward here. Now, it's not all good news. When we see lower interest rates, it's not all good news. And 3 negatives with lowered interest rates. Number 1 would be there's less of an incentive to save. Because your savings account right now, you can go buy GIC at 5 to 6%. You can get 4 to 5% on a high interest savings account. As rates drop, those rates will drop as well. So your savings account will go from, say, 4% to 3, maybe 2.5 or 2. We're kind of going back to where we were kind of pre-2021, 2022. And rates that we were used to for many, many years. We've had a nice spike. It's been great. We've been able to get, a decent amount of interest on our cash, but that's going to come back down, which creates less incentive to save for short-term things in cash. Meaning that If you want to get a bit of a rate of return, you're going to have to take on a little bit more risk. Your risk-free rate on your investments right now is really good. You can get 5% with zero risk. I think going forward in a year, 2, 3, we're going to be back to where we were before, where you have to take on a little bit of risk to get that return. So enjoy it while it lasts, but it's not going to be here for long. The second negative to lowered interest rates would be rising costs of asset. And housing is a great example of that. As interest rates come down, we'll probably see a bit of a rise in housing prices. So not just inventory hitting the market, but we'll probably see prices kind of creep up over time as well. Because again, if someone can borrow money at a lower cost, typically that means their buying power is higher, meaning that it'll drive not only inventory, but the price of that house up. So we typically will see, as interest rates drop, housing prices will start to creep up. Now, again, that's good if you're downsizing. Prices go up, you can downsize, capitalize more for your downsize. But if you're looking to get into the housing market or upsize your house, going forward, yes, you're going to pay less interest on your mortgage, but it might cost a little bit more to get that property in the first place. So again, you got to kind of balance this over time. Is it better now to get the property at a lower rate, maybe get a 1 year or 2 year fixed rate mortgage? You want to have these conversations with your realtor, with your mortgage broker and financial planner, figure out like what's the best timing. And again, no one has a crystal ball, but you can use some logic and some common sense to figure out, okay, we are in a period where rates are going to come down unless there's a big world event that we can't see coming, but we're going to see rates come down, which means that we're going to see more inventory. Prices are probably going to come up. So yes, my mortgage rate's coming down, but the price of what I want is going up. Like, where's that tipping point where it makes sense to jump into the market if the time is right for you? The third negative that many of you will experience is when you look at foreign travel and our exchange rate. So the depreciation of exchange rate. So our Canadian dollar, as interest rates drop, our Canadian dollar potentially will drop as well, making it more expensive to travel abroad. And again, FX and currency exchange fluctuates on a daily basis, but as interest rates do come down in Canada, we'll probably see the devaluation of our currency, making it more expensive to travel. So if you have some foreign travel, maybe you want to convert some dollars now, get that foreign currency that you need for future travel and kind of future-proof that risk a little bit on your side. So as we head into 2024, definitely we should be expecting some rate drops. Will we get 0.5%, 1.5%, 2%? Nobody knows. I hope it's on the higher end than the lower end, but there's good and bad things about those rates dropping. So depending on where you're at, what stage of life, you're probably hoping for one or the other. I mean, if you're retired and you have a bunch of savings in cash and you get that 5% guaranteed, high interest rates aren't a bad thing. Now, if you're building your asset base, buying a house, have debt, that kind of thing, we want lower interest rates. So there's kind of this pull and push on both sides of it. So depending where you're at in your stage of life, who knows? But again, leave a comment below how interest rates have affected you to this point and what you're hoping for going forward. And again, don't forget to like the video and subscribe to the channel.